Good afternoon. Happy Sunday. Hope you are having a wonderful weekend. It is that time again where we do need to take a sit down and get ready for the week ahead in the market. So we got a lot to unpack here, a lot of readings to go over. We got some big economic data on the line this week, some interesting earnings on the board. So without further ado, let's just go ahead and get on into it. First of all, let's take a quick look back at the last week's economic data. We had our CPI data come in, year-over-year inflation for consumers, 2.7% versus 2.8%. A little bit of a shock there. The market certainly enjoyed it on Wednesday. Everything was pretty much going up. Small caps were having a field day. Got a little bit of a reprieve on Wednesday, and then on Thursday we had our producer side of inflation, the PPI, which came in much hotter than expected, 0.9% versus 0.2%. Yeah, that was a little bit of an ouchie, but a little bit of expected. We do know that manufacturers and producers are eating the cost of tariffs. But the main question, like we've been talking about before, is how long can this last? And at some point, all of that is going to start to leak into the consumer side. And then that's when the main headache is going to be inflation is going to, start to creep back up. Jobs could be lost in the time being, but it's just one of those things. Don't try to lose sleep over it. We know it's there. We just don't know the full effects of it. And when we got our consumer sentiment and inflation expectations, the main takeaway from that is that consumers aren't really trying to anticipate for the worst right now, which could be a good thing or a bad thing, depending on how you look at things in life. But as it sits, consumers aren't really thinking that the worst is going to happen anymore like we used to see in the past. So I guess that is overall a pretty good thing. But we are anticipating that some of these tariffs are going to start to creep its way in to consumers, and that we are going to start to see an uptick in unemployment. So the Fed does have a pretty big task on its hands moving forward, especially going into the end of the year and next year. We are expecting rate cuts still in September. We do get another inflation report before that meeting, but as it sits, we are still expecting at least a 25 basis point cut in September. It's not huge. It's not 50. It's not 3 points, 300 basis points like, President Trump wants, but nonetheless, it is a cut for the time being. Moving on to the economic calendar for this week, it is a little bit quieter. Wednesday, we do have the FOMC minutes from the prior reading. Maybe that'll give us some insight. Usually it is a little bit of a nothing burger. We could get some volatility either way on Wednesday, so something to be mindful of, especially if you are day trading or, trading futures. Just be aware of that minutes print. We did get some dissent from the prior meeting. We did have two Fed members who wanted to go ahead and cut rates by 25 basis points, so maybe we'll get some more insight into that. We do have flash manufacturing and services PMI, existing home sales on Thursday, but Friday is going to be the major day for the market and really for any economist, because we do have the Jackson Hole Symposium. Fed Chairman Powell is set to speak on Friday. Usually it's not a long speech. His last one lasted only 15 minutes, but is pretty much his final Jackson Hole Symposium and his last take to prove his legacy and to pretty much prove the Fed's independency, etc. This is his last gung-ho speech at Jackson Hole. Of course, we're going to get him again in September. his term doesn't end until May of next year. So this isn't like his last speech, but this is definitely going to set the tone for the remainder of his term as Fed chairman. We still don't know if he's going to stay on as a member of the board once his term as chairman ends. So that is going to be a big deal. Be very aware of what is happening on Friday when Chairman Powell is speaking. Tune in. You don't want to miss it. That is for sure. Moving on to the economic calendar. There's some interesting names out here. Nothing market moving, but we do have retail names such as Target. You got Walmart. You got BJ's. You got TJ Maxx. Throw in some interesting names such as Zoom, Workday, Baidu, Futu, Cody, you name it. Some interesting movers for sure. Home Depot, I believe, is in here. Yeah, Home Depot. Sorry, I couldn't see it. But yeah, Home Depot, all reporting earnings. Like I said, nothing major market moving like we would have with like Apple, Google, Nvidia, but nonetheless, some really neat ones, something to pay attention to this week, no doubt about it. But it's all going to kind of be drawn out by Jerome Powell. Now, with that being said, here's the grid that was shared yesterday with the notes. If you didn't see them, please check out the channel. We are going to cover some of those that aren't, in the Discord. But as you can see, this is a broad overview of what my readings say as far as the health and overall well-being of the overall market. It gives me a numerical score as well as a numerical score on where momentum is at, what setups look good in which sectors, and then from there I can kind of narrow things down on individual names. So without further ado, screenshot this if you want to reference it, print out whatever you want to do here. But yeah, we'll move this over to the side and we'll get into some charts here. All right, let's start out, first of all, with the S&Ps. Now, when it comes to that grid that I just showed you, the SPY and the Dow is definitely the most important one to keep an eye on. The Qs, yeah, they did get a little bit of a momentum breather, and we'll jump into that in a second. But yeah, everything's still pretty bullish, especially when we look at market breadth, names over the daily 50 simple moving average and the 200 simple moving average remain healthy, both over 50%. S&P names over their 200 daily simple moving average remains at the 60% mark. So breadth still looks good, but there's just some momentum woes here and there, especially when we do look at this again. Sorry, I keep bringing it up. We can see all that yellow out there. We can understand that just even by looking at the colors that this market isn't broad based just yet. We're getting individual names, and you can find these names easily. I mean, Robinhood, Palantir. There's some small cap names that have been moving. Google looks really good, which is one of my setups for the week ahead. Meta has been looking good. Apple has had a great move finally, and you name it. I mean, there's a lot of odds and ends out there, but it's not so much broad based. When we look at the SPY, we can see that it is trading over the key moving averages. Blue dotted line is your daily 21 EMA. This dark green line is your daily 50, and this red line is your daily 200. We can see that we're still trading above the key moving averages. But when we start to break things down into the 30-minute, that's when things start to get a little bit sloppy here. Short-term momentum has stalled out, especially when we look at the Qs. We can see that the 21 has crossed below the 50. But when we look at the daily time frame, it's still pretty solid, structurally speaking. We're trading above the key moving averages. But when you zoom down, that's when you start to see a little bit of that momentum stalling, etc. So we're just kind of waiting for things to digest and then pick back up. We saw a lot of rotation into healthcare names. Thank you to pretty much Warren Buffett and practically anybody major hedge fund was jumping into United Healthcare. It's like they all had a big meeting. It's like, okay, now's the time to buy United Healthcare because it is close to a value name. And you can see that United Healthcare, which is about between 4 and 5% holding within the Dow Jones, yeah, had a big impact there. So the Dow, as it sits, it is trying to play along with the S&Ps and the Qs, who have already made moves into lifetime highs. The Dow, it briefly made intraday lifetime highs. We did not get that daily close in that lifetime high, but the Dow looks pretty darn good here. If financials can turn back up along with that healthcare, consumer discretionary, I think we're going to see the Dow have a really nice rally, but we have to see it, of course. There's still some big players there. Like I said, Google is part of the Dow, and it's, one of my favorite setups going into the week ahead. So I really like the Dow components and the Dow Jones going into the week ahead. Financials took a little bit of a breather. If you're in Morgan Stanley, yeah, they did take a little bit of a hit, and you got to take it because we just had that rotation out of some of these sectors into healthcare, and that's all I see it as, especially when we look at the grid here. I still think that a lot of these sectors still look pretty solid. We're just taking a little bit of a breather. That's the key thing. The leadership is clear within discretionary communication services. If we look at XLC, communications continues to make all-time highs. Meta looks really good. Netflix looks really good, etc. We even had some pretty solid moves in Pepsi last week, finally breaking over 147, moving towards 150. Home Depot, who has earnings this week, finally had a breakout move over 385, 390, and pushed towards 400 and 405. A little bit of a cool down, but yeah, Home Depot looks pretty constructive. Metals continue to look amazing. XLME, nice stuff there. Bitcoin, of course, nice move to 125,000. Ethereum had a nice move as well. Close to all-time highs, needs to break 49.51 there for new all-time highs. So crypto looks good. Some of these miners don't, though. Like MSTR has been struggling these past few days. Maybe we'll see some catch up, but as it sits right now, you're almost testing the daily 200 here, so it's not something that I would really play around with. But as far as my three favorite setups going into the week ahead, it is definitely going to be Google. We need to see a breakout over 207. I would look for a push to 210 to begin with, and then maybe 215. My next setup is definitely going to be United Healthcare. Like I said, it is finally getting a big bounce. Maybe we're getting a dead cat bounce. But we see here that I did add a volume profile from the all-time highs, and we can see that we're at a nice little volume ledge here where support and resistance can be drawn upon, and we're also right here at this dark pool print back at 308, 309. About $621 million worth of shares occurred here back in June. So what I'm looking at here for UNH is if we can use this as, say, like a trampoline, we can bounce into this volume gap here and start to move towards 350, fill this initial gap all the way up to 370, 380. That would be phenomenal. Obviously, moving averages still got some catching up to do, but Friday we had some really strong volume come in, so that's good. We just got to make our way over this hump here and push forward. It might not happen next week, but it is something to consider for the weeks ahead, especially if we continue to see volumes and people piling into United Healthcare, not just retail, but as well as some of these large hedge fund managers. We've seen Warren Buffett jump in, Michael Burry, and there was a slew of other reports that came in on Thursday after the bell. about United Healthcare. So there's that. Moving on is Newmont. Newmont needs to break over 70 for a push to 75. This is another name that I'm looking at for the week ahead. Looks pretty solid. We're trading above the key moving averages. Not much to really complain about here. AbbVie continues to look strong. I'm impressed with that. Gold, gold's kind of a frustrating one. It hasn't really moved. We entered way back here on Friday, and we had that sell-off, and now we're just kind of holding steady. So I'm still debating on what I want to do here, because we're running out of time. So either we start to move towards our targets, or it's just kind of an awkward situation really with gold. But anyway, as it sits though, let me pull up the VIX here. VIX remains muted. There is a 30-minute high compression squeeze here on the VIX. If we start to push above 15.5, that could be a little bit concerning. And if we get over, that would be that 215 simple moving average. That would be probably a little bit of a warning sign out there. So we'll see. Keep an eye on the VIX on that smaller time frame. For sure, when it comes to semiconductors, momentum's just kind of faded off a little bit, but they're still pretty constructive. AMD still looks pretty good. Still looking for a push over 187.28. If you get above that, then we could make the argument for a push towards 200. But probably one of my favorites is TSM. It's right at the daily 21 EMA, but we need to clear 248.30 to make a decent push towards 260. So I do like TSM, Taiwan Semiconductors. When it comes to energy, though, energy is just not something that I really want to mess with. You can zoom out here and just see that there's no strong edge here, like, at all. So I don't think there's anything worth noting. Crude oil not doing much, continues to be muted. It's had multiple days of straight sell off, and it's not doing anything. So until realistically, energy is not going to be on my radar until it gets above 95 to 98, if anything. So you could make the case above 89.50, but it doesn't really scream at me until we get over 98. So there's that as far as the XLE. XLB builders, kind of sideways, nothing to write home about. We talked about communications. Industrials are interesting because we did have Caterpillar break out into all-time highs, right? And we played this breakout, scored big on it. Now it's pulled back into the prior range, and we got this dark pool set up right around 408. If we start to lose 408, there's a little bit of support down here at 402.50, 402, and then it gets a little bit messy. So if markets do want to pull back, I may want to keep an eye on Caterpillar, see if it breaks down. But other than that, I think that's going to be it, really. I think we've covered enough here as far as, where we stand, where the market sits, what's on the economic calendar, what setups look great, which setups don't look great. Market breadth continues to be okay. But the main takeaway here is things look broadly bullish. Momentum has faded on the smaller time frames, especially with the NASDAQ, but you do have clear leadership, especially within Dow. You had some rotation into healthcare. We'll see if that rally continues, or if we just simply rotate back into tech, which could be fun. VIX remains muted. Just pay attention to that 30-minute squeeze. And overall, the market is still really solid. Individual names, it's not broad-based, of course, but individual names continue to look pretty good. So go through your list of names. If it looks pretty bullish, it's probably going to remain bullish. Pullbacks continue to look buyable still, in my opinion, until the major trend breaks. And as it sits right now, trend is still your friend. SPY continues to make new all-time highs. The Dow is trying to make all-time highs. Small caps have caught a decent little bid recently, so we'll see if that momentum can continue. But yeah, but things are a little bit concentrated instead of broad-based, like I said. But yeah, that's going to be it for me. Have a good rest of your weekend. Trade smart. Be good. And yeah, have a good one. Take care. Bye-bye.